please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
In pre-opening, 100 points higher on the Sensex, 25 points higher on the Nifty, 10,800 is where we have the Nifty opening. So 10,800 is here, 10,802, and 100 point higher is what we have on the Bank Nifty, now making a move towards 26,700. In terms of stocks, ICICI Bank is really leading that move now. 1.5% higher on the stock, approaching 300 after a long time. So that would be interesting on ICICI Bank. That actually is the big mover for the market today. Tata Motors is up a bit, Reliance is up a bit, Larsen & Toubro is up a bit, but really the big move is on account of ICICI Bank. That entire Bank Nifty move is because of that. Then of course you have a couple of other gainers in the pharma space. Cipla and Lupin are both up. Dr. Reddy's has moved up. The top Nifty gainer is Adani Ports, but there are others like Larsen & Toubro, Tech Mahindra, which is supporting the market. HPCL is up about 0.5%. Eicher is up about 0.5%. 26,650 is where the Bank Nifty is seeing first bit of consolidation, and 10,800 on the Nifty. Let me talk about the stocks on the way down as well. Power Grid is actually down about close to 1%. UPL is down 0.5%. It's been one of the weakest stocks of late. In fact, down 8% this month on UPL. GAIL is a bit soft. Hindustan Unilever has opened a bit soft, down about 0.5%. And Infosys down about 0.25%. But really the big stock of the morning at least is ICICI Bank, and that's carrying the Bank Nifty for now.
Okay, so well, ever since that news flow of cleaning up of the leadership, etc., ICICI Bank has given quite a bit of returns. In the broader markets, the mid-cap index is also doing fine, Anuj. The stock of the moment is Interglobe Aviation, almost 4% higher now on that stock. Big relief rally after the company said that they have not received any summons from the Enforcement Directorate with respect to the FEMA violations. Not just Interglobe Aviation, but you have a couple of stocks hitting new highs. Bata is added to that list. A fresh all-time high for Bata this morning, looking pretty good. Mahindra CIE as well is a stock that has been hitting new highs, so that continues today. Some of these Adani group stocks are looking good. Adani Transmission, Adani Ports, etc., all up and about. Arvind has been gaining ground, so that one too is up in the green. PFC, a lot of these power companies looking good. Havels, Delta Corp, etc., Group Finance, the usual favorites are all picking up steam this morning. Cummins India is also up almost about 2% or so. Actually, it's not a bad market at all. 750 stocks on the advancing side. Not a bad opening, I beg your pardon. On the downside, though, Bank of Maharashtra is under pressure, but it's a 12 rupee stock, down about 5.5%. You have Opto Circuits, Ruchi Soya, Gitanjali Gems, all your penny stocks that are falling more. Stride Shasan is coming in for some profit taking, so keep an eye out on that. But nevertheless, it's still a decent opening for them.
Yeah, well, lots of stocks moving around. I just want to point out the pipe makers, Welspun and Jindal Saw. Both of those stocks are down because of certain measures being taken by the US government. Certain duties have been imposed, anti-subsidy duties they're called, on companies from India. On the gaining side, Arvind, NIIT Tech, Ashok Leyland, Jubilant, Just Dial, some of these favorite names, they are starting off with gains of about 0.5%, 1%. And I just want to point out PTC India Financial Services, PFC, REC are excited. PTC India Financial Services is up almost 2.5%. And CG Power, there are some upgrades that are coming through. Citi has written a note on it. 65 is their target. Now it's a buy for them. Stocks up about 1.5%. So that's the market for now. But Anuj, slightly off the highest point.
That will happen because there would always be that suspicion that now that you're at the higher end of the range, do you want to try sell trade? Do you want to book profit? That would happen. Also, the mid cap index is not really opening too much higher. So just keep. The market's been a bit narrow over the last few days. Today's big move, of course, is courtesy ICICI Bank. So others are not really participating. Let's see how things move from here. Sudarshan, your thoughts on market opening?
Well, we have faced resistance. I think below 10,750, a short sell opens up, and we should be looking to go short once if that level is breached. There is nothing to buy. Individual stocks will have opportunities. I talked about ICICI Bank, which is a buy. UPL is a short sell, and so is Vedanta, intraday shorts.
Okay. Prakash Gaba, what about you? What are the stocks that you would be looking at? I mean, it's a good opening for all three indices today.
Yeah, it's good opening, but it's closer to the top end of the range. So if it goes up a bit higher, perhaps there could be some kind of a shorting opportunity there, more of an exhaustion pattern here, kind of a fatigue coming in there. But I'd certainly like Reliance. That looks good to me. And Dr. Reddy looks a bit dead weak. Maybe we could see a selling pressure in Dr. Reddy here.
Okay, Prakash, thanks very much for your trades. We'll come back to you. Adani Ports has surged up 2%. Nimesh is just highlighting, this is just, of course, some word out there. It's not confirmed just yet, that it is a block, and perhaps we've seen certain big institutional investors buy in. But we need to verify that right now. That's a stock on the move, worth noting. Sudarshan, thoughts on the opening and any immediate ideas that come to mind?
Well, the opening is weak in the sense that resistance is still holding. We should be going short if the Nifty goes below 10,750, and the stocks I've just explained are on the short side, UPL and Vedanta for intraday selling.
Okay, Mitesh, what about you? Your thoughts on market opening?
Well, the market opening is clearly slightly towards the upper end of the range, but I still believe that there are some opportunities to go long. Reliance has just made a fresh high above 1,020.25, so I would consider that as a buy with a stop of 1%, and I think Piramal Enterprises have been very bullish on the stock for the last 2-3 days. Today, I think it's showing follow through. That could be a buy fit as well.
Okay, by the way, keep an eye on Hindustan Unilever as well. That stock over the last 2 or 3 days has corrected a bit. And today it's given you a bit of a gap. I mean, it opened slightly lower, but then has moved up. Its high recently has been 1645, has corrected a bit, so now making a bit of a move. Sudarshan, before we thank you, any thoughts on HUL?
Yes, HUL is not a buy. I think it's probably ripe for a little more on the downside. So this this upside movement may be a trap.
Gentlemen, thanks a lot for taking us through market opening. Devan, thanks to you as well for taking time out for us. Time now to have our market master joining us. Mahesh Patil, Co-Chief Investment Officer at Aditya Birla Sun Life AMC is with us. Mahesh, good morning.
Yeah, good morning.
So, how have you viewed the recent mid-cap correction? Of course, there's been some stability over the last couple of weeks. And has that presented with top-up opportunities in your existing stocks, or is it time to sort of relook at the portfolio and perhaps get a bit more narrow?
Yeah, I think year till date, if you look at the divergence between, they say, the Nifty and the mid-cap index, and especially the small-cap index, has been huge. In fact, if you look at the BSE 500 companies, there are 250 companies where they have fallen at least 25% from its peak. So there has been a significant correction in the small cap and the mid cap space. And for the first time, actually, we are seeing some good opportunities of value emerging in some of the small and mid cap names. Obviously, there are many stocks which went up last year because of the huge liquidity, stocks without fundamentals or without any major kind of drivers. So those stocks, I think, would not probably go up. But there are decent companies which have corrected because of liquidity has kind of slowed down into that space. And if one takes a slightly longer term view, especially at a time when we see the economy kind of getting some momentum, and a lot of these sectors, whether it's in the infrastructure sector, the consumer durable sector, and building materials, where the outlook going forward looks fairly good. And normally in an economic recovery, when growth starts to pick up, we see some of these mid and small cap companies tend to report better earnings growth than the large cap. So I think the P multiples had expanded significantly in the last year or so. The recent correction in the mid cap space, and also the fact that earnings growth likely to catch up in some of these stocks. I think it will be a good idea to add selectively in the small and mid cap space, and we are looking at those opportunities. Again, mind you, the market still has some kind of headwinds. We are not in a kind of a major big upturn. So there will be corrections in the market, and mid and small cap sector will remain volatile. So investors should be aware of that. But I think it's a good time to start building a portfolio in the small and mid cap space, say with a 3-year view.
Okay, good time to start building a portfolio. By the way, don't lose sight of what's happening in Asia. It's really a volatile ride over there. Trade concerns have simmered, but there's so much retaliation happening from all over the place. Look at Hong Kong. It's now 400 points off from the high point of trade. Just an hour back, we were talking about how Hong Kong was a tad bit in the green, and now look at where that chart has fallen off a cliff.
That will happen, if you're chasing market on either direction right now, Sonia. Also, the dollar index, we're talking about that. So dollar rupee has also come off a bit. It's going to remain like that, this market. Every day. 2 days back, Hong Kong was up 900 points. We were worrying, what's happening. Yesterday it was up quite a bit. Today it's like that. Some of these markets, if you see the charts, they are like, the IFCIs of the world or CG powers of the world. Intraday charts are, like individual stocks. It's really all over the place.
That's why yoga, right? That's why yoga. All right, but getting back to our own markets, the stock of the moment now is ICICI Bank, definitely 1.5% higher, and it has given you quite a bit of returns just over the last, 5-10 days or so. Mahesh, there are corporate lenders who are sort of seeing some recovery as far as their book is concerned. Is this a time to be buying? ICICI Bank, of course, has other positives as well, like a complete cleanup of the leadership, etc.
Yeah, I think on the corporate bank side, clearly we've seen a large amount of recognition of NPAs happened in the recent past, and that has led to an impact on the P&L and the ROEs and the ROAs, which I think will continue for some time, at least the impact on the P&L for at least this year and partly for the next fiscal year. But I think overall, the good thing is that at least the magnitude of stress on the corporate book is pretty much in sight. We're not seeing any further increase in stress overall. There are some kind of issues on the power sector where you would see further recognition of that in this year. But that amount should not be, say, more than around 50,000 to 1 lakh crores or so. So given that and the fact that we are seeing recovery in some of the sectors which have been stressed, like steel, and overall growth pickup, I think looking at the valuations in some of these corporate banks, there's a big divergence again in the banking sector, retail banks and the corporate banks. I think there is some a case for some kind of a re-rating over the next 2 to 3 years in some of these corporate banks. So if one takes a slightly longer term view, I think as the credit costs go down, which we think will happen in some of these larger banks, as the ROEs tend to inch up towards 15, 16 kind of levels, I think, there is a decent upside coming in from not only earnings growth, but also some kind of a re-rating in some of these corporate banks.
Okay. Mahesh, I'm guessing pharma is now becoming quite a case for managers like yourselves, right? Because there's so many things that are going in favor. Companies are sounding positive, approvals are coming through. We just were speaking to Lupin yesterday. They were saying worst of the pricing pressure should be definitely over. There is a rupee tailwind. So, one can build up a huge bull case. The question is, are you convinced, and would you be looking at increasing pharma holdings across the funds?
So you're right. I think the pharma sector, again, one of the laggards in the industry, and seen a significant correction in terms of earnings. Yeah, but I think recently we've seen some positives coming in. At least the negatives are looking to be behind. So I think the sector clearly has bottomed out, both in terms of earnings, and you will see a recovery in the, partly in this year, but major in the next year for most of the companies. And so I think while at the margin things are turning a bit positive, we're not seeing any major tailwind for the sector coming in, say, from the US. Yeah, obviously the pricing pressure in the US has kind of eased off. So compared to around 10% kind of a decline for the core business, it will probably be in the low single digits. So that is one case. But I think the domestic pharma industry is looking in a much better shape. We are seeing decent volume growth, and also the regular pricing, because of which is linked to the WPI, is enabling companies to take price increases, and that's more like a stable secular growth story. So overall in the sector, I think it still remains stock specific. We have seen some rally from the bottom. There could be some disappointments in 1 or 2 quarters. It's not like you will see an immediate improvement in earnings, but I think it will provide opportunities to really build in that space. And yeah, I think after being negative for some time, I think we are seeing positive green shoots coming up in the pharma sector.
Okay, the stock which is really looking interesting right now is Infibeam, because there are many block deals which are happening, and if you look at the website of NSE and see the depth of the stock, there's quite a few which are pending now. So it looks like there's going to be more and more block deals now on Infibeam. It's happened mostly around 151 to 152. So that big bar that you saw was on account of that block that took place at 151. So let's perhaps just pull out the block deal data if we have and see the block deals which have taken place. I think I can see 4 block deals right now. Yeah, there they are. And decent, about almost 0.5% of equity so far on Infibeam. Let's see how things move from here. So Mahesh, for this year, the big call for retail investors is after last year, and last year would have led a lot of people to invest in the bad apples, right? And on an average, some stocks are down 40 to 50%. What should they be doing this year in the market? Should they be averaging some of these stocks, or as we've seen the markets become a bit narrow, quality stocks have become more expensive, should there be shift towards these stocks?
Yeah, I think as the liquidity has kind of slowed down, I think we are seeing clear differentiation in terms of, where companies where there have been fundamental and companies which have just gone up because of liquidity. Again, within that, as you rightly said, some of the quality stocks, the multiples have really expanded, but there are many companies even decent quality or in the mid and small cap space where the correction has happened and where the earnings growth or the fundamentals are fairly sound. I think it's time to look at some of those stocks, and which I mentioned earlier. I think there is some value emerging in some of the small and mid cap space. But having said that, again, I think the recent fall, the correction in the market, and especially in some of these small cap and mid cap stocks, has clearly again highlighted the fact that for retail investors getting directly into stocks, especially down the curve, where the risk is higher, I think the correction and the loss can be significant. And we've seen stocks tumble, by 50, 60 or 70% where there have been some corporate governance issues. So I think it's, it's important for some of these retail investors to then come to the mutual fund route really, especially in the small cap and mid cap space where right kind of a diversification, right kind of stock selection is important to really protect on the downside when there is market correction.
So some of those spaces, I was looking at your infra fund, you have some very interesting stocks, Honeywell, Crompton Greaves, PTC India, etc. Some of them have not done anything this year, but for the long-term investors, you think there's still potential here?
Yeah, I think especially in companies like in the power sector, we haven't seen much of an improvement over there. There again in infra sector, there has been some kind of a pickup in the power T&D side where we are seeing order inflows come in. Again, the broader recovery in the capex side is still some time away, but there are some green shoots coming in the capex side which should lift up some of these capital good companies. And then on the construction, urban infrastructure, road construction, I think the order book is fairly good. Execution as this picks up, you should see earnings coming through. So I think overall on the infra space, I think the recent correction has provided a good opportunity in some of these stocks. Valuations have come down to more reasonable levels, and we are seeing a decent pickup in growth in this fiscal year. So a lot of the mid and small cap names, growth in FY19 looks to be much stronger than the broader Nifty, which is somewhere around 18-20%. The mid and small cap, at least in our universe, we are looking at a growth of around 23-24%.
Okay, speaking of mid and small caps, by the way, the market's cooled off quite substantially. Mid-cap index actually turned negative. There's plenty of selling on quite a few stocks. Some of your ASM names like Rain Industries, Bhansali, Avanti Feeds suddenly down 3.5%. Even a stock like Jubilant Foodworks has come under some stress. There's a lot of selling, profit-taking rather, perhaps in pharma. Watch out for the large cap names like DRL, Sun Pharma, also something like Glenmark. Many of these stocks under pressure. Mahesh, a quick final question to you. How are you now looking at consumption and sort of the calls that you're taking in that sector?
Consumption has, it's been more of a secular story in India, right? So it's a question about getting the right stocks at the right valuations. Recent numbers which have come in from the consumer pack are pretty encouraging in terms of pickup in volume growth. We've seen a lot of these companies have got the benefit of GST and have seen some improvement in the margins, especially in the other costs, despite some commodity inflation, what we have seen. And I think the full benefit of GST will come through in the coming years, be it on logistics or other areas. And I think rural consumption is showing sign of pickup, though it's not as strong as what we are looking forward. But looking at this year, where we're seeing a stronger focus by the government in terms of rural, trying to double farm incomes. Also, the monsoons have been good. So I think the sector should be fairly steady. At least there is visibility in terms of steady growth in that sector. Valuations, again, are expensive in a lot of the consumer names. But consumer discretionary is offering an interesting opportunity. We've seen some correction in this name. There has been some, some of the companies post GST have still not really come back to the growth rate, potential growth rate. So I think between the consumption space, consumer Staples, while the outlook there is good and steady, valuation is expensive, consumer discretionary offers a better entry point, and as the per capita income goes up, as the penetration level, rural penetration increases in some of these categories, I think one can expect a stronger growth in the coming years over there.
Okay, Mahesh, thanks a lot for stopping by. We have to take a short break on that note. It's flat for the markets now. Hi, welcome back. The second tranche of the ICICI Prudential managed Bharat 22 ETF follow-on fund offer was launched on the 19th of June for institutional investors, while for retail investors, the further fund offer opened on the 20th of June. S. Naren, the Executive Director and CIO, ICICI Prudential AMC, joins us now to discuss more about this. Naren, hi, good morning. Very interesting product. There's a lot of consumer interest here. So I want to start by asking you, for retail investors, why should I invest in this? And what kind of earnings, compounded annual growth do you expect for this basket as a whole? And how much return should investors expect?
I think what our market views, as you know, is that we are very positive on large caps relative to mid and small caps. The entire construct of Bharat 22 is significantly large cap. Most of the companies are mega caps. So from that point of view, I would say that it is in tune with our view that large caps have a much better outlook compared to mid and small caps. The second, clearly, if you look at the composition of the index, there are a few private sector companies, and other than that, we have strong public sector companies. And when you look at the valuations of many of the public sector companies, you will find that many of them are actually trading at pretty attractive valuations. And in fact, the price to earnings of this index is easily 30% lower than what it is of the Nifty. And many of them have return on equities which are reasonable, and some of the banks have gone through a big NPL cycle, and we think that the NPL cycle has just about peaked or is peaking in this period. So we think that the outlook for the next few years for earnings for the Bharat 22 pack is very significant. As you all know, the earnings expectation in the large cap index itself is 20%, and here there could be stocks whose earnings potential is much higher. Yeah. On top of all that, there is a 2.5% discount on the reference price, and because you have a 2.5% discount on the reference price, there is an intrinsic margin of safety when you invest in Bharat 22 because of that reason. And this combination makes it very attractive for retail investors, in my opinion, much more than it is for institutional investors. And we look forward to investors looking at it, particularly in the retail component and in the component where we have created, which is the fund of fund offer, where it's not necessary for someone to have a demat account.
Okay, Naren, good morning. My only problem with this fund is that it has a lot of power stocks, a lot of oil and gas stocks, where in election year there could be a lot of uncertainty. Your thoughts on the risk factors in some of these stocks?
If you look at power, actually the entire regulatory environment is based on a CRC 5-year period, which extends all the way till 2019. And these are all regulated return companies which have a lot of growth because of the fact that most of the private sector has not been investing in power, particularly thermal power, and the few of them who started thermal power plants, they're all actually moving out of this area. So I think the power sector, clearly I would say that the worries from a regulatory point of view have never been there, and we think that the entire down cycle in power utilities ended a few years back, and on a continuing basis we need more and more power, and that's why we are not really worried about it. On oil, frankly, till this point of time the government has not had any subsidies, and we don't have a situation where diesel has been controlled and a big diesel subsidy or a petrol subsidy or an upstream subsidy has been created. And there have been continuing statements from the government that they would not move back to a subsidy regime which existed between 2006 and 2014. So I think that means that if I would say that those sectors have got derated because oil has gone up, and that has an impact on the country more than on these companies. We have seen some decrease in marketing margins, but I believe that these are all companies which have a very, very strong base, because it's very difficult to set up a nationwide oil product distribution network at this point of time because of the way real estate is, how difficult it is to set up pipelines. So I would say that clearly the risks on these areas are overstated, and that is one of the reasons why some of these stocks have corrected. But we would say that the opportunity clearly exists in Bharat 22.
Naren, morning. My area of concern is actually the banks. You've got 4 key names here: SBI, BOB, Indian Bank and Axis Bank. Now, these haven't been really the stalwart leaders of the rally so far, and naysayers will still argue whether the PSUs, I mean, even if there is a turnaround, whether the recovery is going to be far more slow. Axis, we are awaiting to see what the management change brings about. So, could financials weigh down the performance of the ETF?
Actually, if you look at our portfolios, we are clearly positive on large caps, which is the bedrock of Bharat 22. We are positive on power, which again is one of the important sectors in Bharat 22. We have been clearly very positive on corporate banks, and all the banks that are part of Bharat 22 are corporate banks, and we think that the corporate banks have seen a long downward cycle from 2010 to 2018, and all the NPLs that have actually come out. So I believe that we are actually at the bottom of the corporate banking cycle. And if you look at it, the banks which are part of Bharat 22 are the banks which have much more capital, and they are not capital constrained. They are not either PCA banks. So I would say that actually the outlook for the corporate banks in Bharat 22 is pretty good at this point of time, and it reflects our entire view of being positive on corporate banks, upstream oil, and power utilities, and we are clear believers that capital goods cycle is also likely to improve. So that's why it is very much in tune with our macro views that we have in our portfolios.
Okay, I'll come back to the Bharat 22 portfolio in a bit, but lest we run out of time, I just wanted to squeeze in a market question. The last time we spoke to you, you were a bit cautious on the market. You were recommending investors to go in for balanced funds, etc. After the kind of correction that we've seen, any change in your strategy at all?
I don't think there has been a big correction in large caps. I think we are 2% away from the highs. So I don't think we've had any big correction. We continue to think we are in a moderate return world, which is why a product like Bharat 22, which is focused on good value stocks and there is a 2.5% discount, becomes relevant. But I would say we are not believers in a big return world from here, at least not till US says I'm not going to increase interest rates, and which is why global markets have all, and we expect them to be volatile over the next 1 year to 1.5 years.
Okay. In that case, Naren, you reckon I mean, of course, these things are tough to time, but the high for the year may have been made, and considering the last year's returns, this year would be moderate, and the market would be in a bit of a range?
Yeah, we have been believers in a range-bound market from here, and we continue to think that for big returns to be made, Indian elections have to get over. US should stop increasing interest rates. US should stop quantitative tightening. and oil should come down from where we are to about $65 at least. So I think once one of these four plays out, then we intend to relook at our entire call and look whether there's potential for large returns. Otherwise, we are believer in lower returns, we are believers in large caps, and that is the kind of framework we have had, and which is why we were very keen on launching Bharat 22, because it's a large cap oriented fund and there is a 2.5% discount on reference price.
Okay, well, if only everything worked that way, right? I mean, that would have been a purple pat sort of a situation for the market. Unfortunately, we're far away from that. Thanks, Naren, for joining us and giving us your thoughts on the market and your thoughts on individual sectors as well. That's an update on the Bharat 22 ETF and why you should be investing there. But here's a quick programming reminder now. Our special series Hunting for Value will focus on a company whose stock has slipped 30% this year. Their revenue growth has been much slower than their orders booked, but the management has guided for a 25 to 30% growth in Q1 of FY19. Is it a value pick or a trap? Stay tuned to catch all the details at 9:50 this morning.